Good morning, good afternoon, good evening, wherever you are in the world today. I hope you're absolutely fantastic. So, I've got special people who are close to me who are currently trading gold. So, whilst creating an analysis for them, I thought I would share it for any of the MTOPS members who might be going through some gold trading themselves. Uh, for anyone who's been close to this price action since the start of 2026, it's been on a massive bull run. So let's talk about it. As you know, MTOP stands for Market Structure, Time Forecast, Oscillator, Price Forecast, and Support and Resistance. So MTOPS is what the strategy is named after, and we go through each of these systematically. All right, so let's talk about market structure. Let me just get this locked. Yeah, scaling is very important when it comes to geometrical trading, right? And okay, so in terms of market structure, you may or may not see because this chart is a bit dark, so hopefully you'll view it on a bigger screen like a laptop or computer instead of a mobile device. But if you can see it, then that's great. So we start off with the start of the cycles, end of the cycles, and then that gives us our 4 quadrants, which helps us space the turning point spacing in the cycle at large. Over here, we've got a 10 going to a 1 going to a 2, and a 2 going to a 3. So what does that tell us? Well, it tells us that it's a little bit late in the cycle overall for a 3 to be forming. Okay, so that's the end of quadrant 1. Now 3 is in kind of the deeper section of quadrant 2, and that'll come into our next forecast. Our next element of the MTOPS process. So from a market structure perspective, just to clarify, turning point 3, the second high of the cycle, is already quite deep in to quadrant 2. From a time forecast aspect, we've got some confluences here to suggest that we've got a turning point coming in. All right, so one of them is, if you know the strategy, this is our forecast line, okay, and without getting into specifics, that's the 100% transition length between the previous same side highs or turning points, and the 50% mark of that transition length will then become one of the possible turning point spots. So at the midway point is where price is currently sitting. So from a time forecast aspect, it is a likely area for it to reverse at. And then if you look at our sine wave, and we just perhaps give it a little nudge to line up. Oops, I totally ruined that. Let me just make sure that we got the sine wave connected in properly. Okay, that's all good. And then we're going to line it up with the previous same side high, and then look at where the sine wave is in relation to this high, which is around about there. Okay, so that trough of the sine wave lines up well with where the price actually currently is. So from a time forecast perspective, it is a high probability that we're going to start seeing a turnaround on price on gold. And for the oscillator, I think it's pretty high. It's over the, it's actually sitting in the 90s. It looks like it's trying to curl over to be overbought over here. So very bullish, but I'm not entirely sure if we'll be able to withstand these levels for very long. It's already in the 90s. So yeah, if you have gold, if you've bought gold and you've ridden the bull run up, my recommendation is starting to sell off what you would prefer to lock in. So if you want to keep gold forever, sure, go ahead. But if you are looking to lock in some profits, I would recommend doing so now, just to make sure that you got out whilst there was a all-time high. And I mean, if the market does decide to continue raging on, then perhaps get into it again rather than sit in it, price drop, and you feeling regret that you could have sold. So rather sell for cash, for fiat, for stable coin, whatever it is that you want to transfer it out of, and then wait for another buy signal. I think we are topped out on gold at the level that it is currently. And yeah, moving on to the price forecast. If you've gone through the MTOPS program, which I'm sure you have, then you know that the levels are sitting over here at the 1.5 of the price forecast tool, which takes us into the support and resistance, and that is along 1/1 of the GAN tool. Alright, so it's along this 1/1 line, the middle line over there, and it's now come to the resistance arc number 4. Alright, so the 1/1 to the arc 4, and then it's at this resistance apex. Okay, so this is a great place for price reversal to happen. If it doesn't happen here, which is unlikely, but if it doesn't happen here, then it'll continue to go out there. However, that's going to take another month worth of travel, right? So again, this could be the all-time high. I would recommend moving your gold to, if you're a hodler or a holder, move it over to USD and just wait a few days to see what it wants to do next. Because if there's a continuation along this line, then sure, buy back in and then take it up to the next threshold, which will be on the 20th of February. But to be safe, I would say sell to cash, hold it, and be very chuffed with yourself that you've sold at the recent, I mean, like, I'd say more than recent. I'd say it's been a while since we've seen this kind of action on gold. So the all-time high is where you are locking out at, and you can feel really, really good about that. And should it decide to perhaps continue to higher levels, then let's reconsider then. But it's best just to lock in profits, secure your position, be proud of yourself, and that's all I got to say about that. Alright, so systematically we've gone through the 5 major elements that move a market, and that's the analysis conclusion. Sell if you're a holder. If you're someone who is a day trader or a swing trader, my recommendation is just to allow this to play itself out. Don't get too hasty just yet. Let's get some confirmations out the way, and then thereafter, if you want, we can short down the next transition and then build up as the market sees fit. Okay, that's it for now. Until the next one, ciao.